Hello, everyone. Welcome to our weekly market update provided by SC Securities. This is for the weekend of 25th June. And as always, we'll be taking you over the main highlights of the stock market and some of the macro news affecting the market, as well as a dive into the currency and secondary markets, and followed up by some news on the commodity markets and news in a global market context. And afterwards, our technical analyst, Harin, will be taking you through the technicals regarding the all share and our pick of the week this week. So to start off, the index actually gained this week despite somewhat of a midweek wobble. But one of the major highlights was that turnover came in at quite low levels compared to previous weeks. So the all share rose by 1.07%. However, the S&P actually fell by 0.71%. The week saw the index experience some volatility amidst a low turnover environment, particularly on Wednesday. We saw the index go on somewhat of a roller coaster ride. However, both indices were able to recover much of its lost ground. The relative strength index, or the RSI, came in at 75.63 on Friday, which is in the overbought region. And the foreign participation was somewhat tepid this week, with buying mainly coming on counters such as tile, whilst the selling occurred on dip products. In terms of some of the macro news that we're looking into this week, the major headline is that headline inflation actually rose above the central bank's target threshold. So the headline inflation based off the NCPI, or the National Consumer Price Index, rose to 6.1% in May, finally crossing the central bank's target threshold, which is of 4% and 6%. This was mainly driven by rises predominantly in the food segment, but also on the non-food segments, with increases coming in counters such as fuel and utilities. We actually did publish a flash note on this, and this can actually be found on our LinkedIn page, as well as to whomever we sent it across in our client mail. And what we actually estimate is that this figure will only rise for June on the back of a fuel hike, which happened a couple of weeks ago, coupled with the fact that the currency is still somewhat of a depreciating cycle. And we feel and we maintain that the central bank must revise policy rates upwards to combat the inflationary pressures that are currently being experienced by Sri Lanka. In other news, State Minister Ajit Cabral cited this week that the government is actually bracing for the eventual loss of Sri Lanka's GSP Plus scheme. Now, this was brought into our attention a week ago with the EU Parliament looking to actually temporarily strip Sri Lanka of its GSP Plus scheme. The government have, however, cited that they will put their full efforts to avoid such an event. As discussed, the scheme would hinder the export side of Sri Lanka, and unfortunately, it will result in the loss of the preferential scheme into Sri Lanka's second biggest market, which is the European Union, resulting in a significant loss in foreign income into the country. Now, we have delved into this a bit. Now, as stated, the apparel industry was something that we had preliminarily stated as a sector that might actually suffer from this revocation of this preferential scheme. But actually, more than the apparel segment, it is segments such as fisheries that stand to lose the most. The apparel sector still very much caters towards high-end or luxury brands, so it's not like there is much of a substitution for these luxury manufacturers. And finally, Fitch Ratings cited that last week's revoking of suspensions of local banks in investing in international sovereign bonds, or ISBs, had the potential to increase the bank's exposure to sovereign and foreign currency funding and liquidity risks. Although we still maintain that this is a positive for most of the commercial banks, one thing that Fitch have correctly highlighted is that local banks will continue to face difficulties tapping into the foreign exchange funding market due to the country's current low credit rating. In terms of our currency and secondary market news, there wasn't much fluctuations in the currency market. However, in the secondary market, there was some noteworthy news. The bond auction held on the 22nd of June, that was Tuesday, saw only 50% of the bonds auction go, 50% of the bonds auction go unsold, excuse me. And with a large quantum of both short tenor and long tenor bonds going unsold. Now, in prior auctions, we did see there was some appetite or increased appetite for the short tenor bonds, but now this bond auction, coupled with last week's bond auction, where 60% of the bonds went unsold, showed that there is dwindling appetite for even the short tenor bonds. These two failed bond auction results in the central bank having to print even more money, despite them engaging in what is already a huge quantitative easing exercise. This will, of course, devalue the rupee, whilst also strengthening calls for a policy revision, which we have consistently highlighted as the way forward. Now, in terms of noteworthy dates to keep a check on, the 8th of July next month is when the next monetary policy review will be held. So we will get some credence into that then. In terms of the commodity markets, gold continued its descent this week on the back of a stronger US dollar that made the precious metal more expensive for holders of other currencies. The oil price actually rose to a two-year high this week, with Brent prices climbing above US dollars 76 per barrel, on the back of US crude inventories actually declining as travel picks up. We maintain, as we stated earlier, that we actually forecast the oil prices to actually go above the $80 per barrel marker, and within the next month or two. And furthermore, unfortunately, in terms of somewhat of a light on this news, is that we were predicting that oil prices might come down. However, that might be thrown into the gray as there is a worsening of the geopolitical situation between the US and Iran. So the proposed sanctions that might have been lifted may not be lifted on the back of Iran's recent presidential election and some inconsistencies in that process that were highlighted by the US earlier this week. So this overall may actually be reflected with further potential hikes in the local oil price. So this is again a counter that we do need to maintain a view on. And finally, in terms of global market news, Asian markets actually rose on Friday, tracking gains on Wall Street that lifted the NASDAQ and the S&P 500 to record highs after the US tentatively embraced an infrastructure deal or infrastructure injection, which would inject $579 billion in terms of investments for roads, broadband, internet, utilities, and other projects. This is still very much in the preliminary phase, but it is the first step in the right direction. So this was seen as a very positive news. In other Asian stock market news, the Chinese blue chips rose by 0.43%, while Hong Kong's Hang Seng and Seoul's Kospi rose by 0.61% and 0.79% respectively, whilst the Nikkei was up by 0.59%. Pan-European stock 600 ended 0.9% up, boosted by rallies in travel and leisure shares. Whilst finally in the UK, we saw the FTSE rise on the back of the Bank of England deciding to keep its monetary policy unchanged. So that's at 0.1% interest rates, despite concerns of inflation potentially crossing the Bank of England's target threshold of 3%. Those are the main highlights for this week. And as always, I will now hand it over to Harin to go over the notions for the all share as well as our pick of the week this week, Valuable Power. Over to you, Harin.
Thank you, Nuwan. So I'll be first starting off with the index. So as we can see, as of today, the market closed at around 7,809.15, and also which is at the daily resistance level of 7,800 and 7,850 that I have clearly identified. So basically, previously we were able to see how the previous daily resistance 7650, 7700 has been initially broken out, and a proper retest has occurred, whereas the index made a low of 7,634.78 on 23rd of June. So basically from that area, index managed to basically from the daily support level, making a wick below somewhat around the daily support level, and bouncing off again to the about the daily support level 7650, 7700. We were able to see how the index pulled back upwards again to the daily resistance 7800, 7850. So the next area of resistance would be 7950, 7950 and 8000. But however, the RSI is somewhat in the overbought region, which is 75.63. This seems to be pretty much RSI seems to be pretty much heated. Overall, looking at it, we can see that the trend is up, and also looking at the EMA levels such as 18 and 8 exponential moving averages, we can still see that the bullish momentum seems to be carrying still. So we had a previous structure high, and now we have another structure high at 7,809.15, and breaking this daily resistance level, we'll be able to expect the psychological area, which is 8,000, whereas the daily resistance goes at 7,950, 8,000, that key area. So overall, it's in upward trend. So hopefully we will be able to see somewhat around a breakout from this daily resistance, and expect that index to reach the next daily resistance. But however, if the index pulls back continuously, gets rejected from this daily resistance 7800, 7850, then we'll be able to expect it to come down to the daily support 7650, 7700 once again, and there could be somewhat of a consolidation in between 7850, 7650s and 7850. So there should be a proper breakout from this region of the daily resistance, and then only we'll be able to expect the psychological area. Else there could be a decline from this area of resistance, and once again the daily support could be tested. So moving ahead with the valuable power, this is the monthly chart, and of course the RSI is 61.65. So as we can see, valuable power seems to be was in declining momentum during the past few years, and during the past few years, and we can see that the decline actually continued heavily, and then we were able to see a breakout from the declining trend and a retest of the trend, and now the price is actually trading above one of the key monthly support levels, 7 rupees and 7.3 rupees in between. So we have strong resistance at 8.4 and 8.7 rupees. So basically this resistance could be tested again 8.4, 8.7. So we do have somewhat around a consolidation here, where the price is actually ranging in between this monthly resistance and the monthly support level. So as the price closed today at 8 rupees, so the resistance would be 8.4, 8.7. So we need a proper breakout from this 8.4, 8.7 monthly resistance in order to reach the next level of resistance, 9.7, 10 rupees. So looking at the moving averages, of course, we can see that 18, 8 and 8 moving averages have crossed last year, somewhat around in August, September. So this remains to indicate that since the price is also trading about these two EMA average moving averages, 18 and 18, it still remains to be bullish. But first would be the price could test the 8.4, 8.7 month resistance, and breakout from that would be the next key resistance. Else the price would actually consolidate again and come down to the monthly support 730. Thank you. Over to you, Nuwan.
Thanks, Harin. And as always, thank you for joining us. And as always, this report will be sent across via our client mail, but we will continue in this week. We will be releasing it onto our LinkedIn page as well. So please visit our LinkedIn page at SC Securities and to gain access to this report as well. And as always, wish everyone a very pleasant weekend and see you next week. Thank you.